Why do self-employed investors get denied more even when they're making great money? Is because if you're like myself and you're self-employed and trying to reduce down that tax bill as much as possible, then what's going to end up happening is what you show up on your tax returns is going to be a lot different than what you're actually taking home. And maybe your business made 400 grand last year, but all of a sudden they start looking at what you took home or your tax returns and it shows only 100,000. Well, in that case, it's going to be a lot more difficult to qualify for, say, a conventional loan. The good news is we have solutions to this. You can go down the route of a DSCR loan, which most of my clients do, where we qualified strictly based on the rental income of the property. However, you have another option. In certain markets, these values, these loan amounts are so big that even though there's high rents, they're not enough to cover the payment. So for you, we have the option of doing a bank statement loan. A bank statement loan is where we will take the last 12 months of the revenue of your business, and typically we can get 70, 80, maybe even up to 90% of the total revenue of your business as your total income that will qualify you on that debt to income ratio. So going back to my example, 400,000, we have a $360,000 income to qualify with the debt to income ratio, which makes a gigantic difference if you're a real estate investor who's self-employed, or if you're just self-employed and trying to get financing on your primary residence. DM me or click down on the link below, jump on my calendar, let's have a conversation about your scenario and see what option fits best for you.